Hi, ladies and gentlemen. Sorry to interrupt your conversations, but if you want to take a seat, Wilson and Claude will be taken to the stage in just a second to have their discussion. Before that, just want to quickly thank our sponsors again for bringing us together, allowing us to put something like this on. So let's not delay anymore. Gentlemen, I invite you to the stage and look forward to hearing what you have to say. Cheers.
Okay. All right. Thank you. Thank you for staying with us, everyone. It's afternoon now. Good afternoon, everyone. So my name is Claude Ashkar. I've been, just very quickly, I've been over 30 years in this industry, and most of them actually in this part of the world as well. And about 20 years ago, I founded Actel Consulting, which is a technology advisory firm. One of the things we do at Actel is working on due diligence and transactions, and therefore working with investors such as DigitalBridge. Wilson, very pleased to having this chat with you today. Would you like to introduce yourself and your company, please?
Thank you, Claude, and thank you to the audience for making the time to join this fireside chat. So my name is Wilson Chung. I'm a principal with DigitalBridge, and I'm responsible for the Singapore office of DigitalBridge. So from Singapore, we cover the entire Asia-Pacific region. DigitalBridge is a global investment firm which specializes in investing in digital infrastructure assets. We manage about $50 billion across 25 portfolio companies spanning data centers, towers, fiber, small cells, and edge infrastructure. We've been here in Asia for 3 years. We've launched a number of platforms spanning across the sectors, and we've been very excited about the thematics that we see here in the region.
Right. Yeah, no, thank you, Wilson. And you and I know each other from before your DigitalBridge days. You said we've been here 3 years, but you started it in Asia, right? I mean, yeah. You've been with the company 3 years here, yeah. Right? Yeah, exactly. So, which leads to the question, Wilson, looking back, we'll talk about projecting into the future in a little while, but looking back in the past 3 years, what sectors have been most exciting for you? And if you can describe that,
sure.
Please.
Look, I think, Claude, the best way of answering that question is to actually look at what we've done in Asia over the last 3 years. When we first launched the office here, there were really two sectors that stood out to us that we felt very excited about. We felt very positive about the future trends. One was towers, specifically towers in Southeast Asia. And the reason why we like the tower sector in Southeast Asia is, one, it is still a relatively nascent market in terms of cellular coverage and cellular performance. So we saw opportunities to build new towers for both coverage and also for densification. And secondly, we saw that there would probably be a need for mobile operators to potentially monetize towers. And there are reasons for that. Some of it's driven by capital. They would like to release the capital for investment into 5G and other sort of aspects of their core business. But another part of it is also service standards and performance. As an MNO, you own your own towers. You answer to yourself. There's no third party that you can lean on in order to deliver new build towers to ensure SLAs for existing towers. But if you work with a towerco, they can deliver that to you. So it was a sector that we're very excited about, and we're fortunate enough to form a partnership with Suresh Sidhu, who I see sitting here today, to launch EdgePoint Infrastructure. So over the last 2 years since we launched that business, we've undertaken both organic builds, again furthering the mission of increasing coverage and improving network performance through densification. But secondly, working with several key mobile operator partners to help them monetize non-core assets and to improve their network performance. So that's for us has been a big thematic. We remain very, very bullish on towers in Southeast Asia. We see the trends that have been played out in the last 2 years to continue for a period of time. Now, the second sector that we felt excited about was hyperscale data centers, and that's something that we have observed on a global basis. We own a business called Vantage Data Centers, which is one of the leading hyperscale data center developers and operators worldwide. And we saw certain trends in North America and Europe, which we thought would play out in Asia Pacific. So we've taken Vantage to Asia, and there are a number of sites that we acquired, but also a number of greenfield sites that we developed. And we continue to see a lot of runway in hyperscale. Now, two other sectors that we entered that we developed a view over time. One was dark fiber in the Asia Pacific region. What we thought was that, look, there's a lot of people actually playing in towers and hyperscale data centers, but actually what we didn't see in the region was the kind of fiber networks that modern cloud infrastructure requires. So we saw an opportunity to enter that space, and we launched a new dark fiber platform called Zenith in partnership with Columbia Capital, and we did it earlier this year. Now, the last space that we're really excited about is edge infrastructure. We recently announced a partnership with Time.com of Malaysia to acquire a stake in Ames Data Center, and the rationale behind that was to really take the business that they have in Malaysia, which they've done a good job of building carrier density in, and then projecting that out to other markets around Asia Pacific, to serve the needs of telcos, hyperscalers, CDNs, and so forth.
That's a rundown. It's three major sectors, and now with the latest investment that's just been announced, Ames out of Time.com in Malaysia for building an edge platform, right? Is that going to be Southeast Asia?
That's the starting point, yeah.
That's the start. Okay, great, thank you. So if I move to the next topic, Wilson, projecting into the future now, what do you see trends? Any trends you can see over the next 3 years, let's say? I think 5 years is a long time, but let's say three years.
I think the first thing I'll say, Claude, is, and it may be a little bit disappointing for the audience to hear this, is it's going to be more of the same, right? Our base business, we see as being more of the same. There will be more towers that we built in Southeast Asia and across Asia Pacific. There'll be a lot more hyperscale data centers being built, both in existing cloud regions, but also in new regions. And there'll be more, and there needs to be a lot more fiber built, across Asia. So I think none of what I said about the past really changes. What we do see is that activity expanding to emerging markets. So whether it's, the certain markets in Southeast Asia, whether it's secondary or tertiary cities in developed Asian markets, we see the expansion of that, and obviously India, as well as another big one. So I think I'd say that probably as an investor, we would continue playing the thematics that we've been playing the last 3 years. But a couple of new things that we see around the horizon. I mean, one is 5G. 5G will be huge, and that will create a lot of opportunities for players in the ecosystem to evolve and to develop, and that will drive rollout of more of the same things that we've been doing. And that would also, I think, potentially create new asset classes, in the space, whether it be in small cells, whether it be in indoor infrastructure, private 5G networks, or services, businesses that investors can play in. I think there will be more infra sharing, and I think it's probably a thematic that has been discussed by some of the other panelists here at this conference and other conferences. But we see more, let's say, transition away from telco-owned assets, whether they be data centers or towers. We see fiber moving to more of a neutral host model, and we potentially see RAN sharing as well, whether it's something like what we've seen in Australia with TPG and Telstra, or something else. And I think each of those opportunities will create investment ideas for firms like ours and others. I think another factor we see is new technologies at play, O-RAN, C-RAN, virtualization network functions, satellite. I think these are all, again, create new investment opportunities for people like us. And then the last trend I think I'd mention is ESG. I see there's a very, very strong focus, I think, from both a debt and equity perspective on ESG. Certainly we as a firm, we're very focused on ESG, and we've made a commitment to the market, that will be net zero by 2030.
It seems much more to the same. We'll get to challenges in a second, but I mean, Digital Bridge, Wilson, is unique among investors that you cut across every sector of the digital infrastructure landscape. You mentioned towers, you mentioned data centers, you mentioned fiber now networks, and getting into the edge as well. And I believe that situation allows Digital Bridge to play a role in the sectors that you just mentioned, private networks and edge and so forth. So wish you success going forward for these trends. On a less rosy, perhaps, topic, I want to move next. I want to talk about challenges, if that's okay, Wilson. I want to highlight 3 of them, and please develop them and add to those as you wish. The first one is the supply chain challenge that we're all very familiar with, from chips to ships. And by ships, I mean cable-laying ships for the submarine industry, so I'm staying within the digital infrastructure landscape. Second one, of course, is the Russia war on Ukraine, which triggered an energy crisis, an energy crunch, the cost of energy, and turbocharged basically the hunt for sustainable energy. We talked about ESG earlier on, to replace fossil fuels. And the third one, of course, last but not least, is the current inflationary environment. So all of these are headwinds, as I call them. Would you comment on those, please, and how they're affecting your business?
Look, I think certainly the world is a lot more complex today, right, than it was 12 months ago or even 6 months ago. Some of these challenges, Claude, that you mentioned are not unique to digital infrastructure. I think they're challenges that impact all businesses. But in terms of the way that we're thinking about it, starting with the first item you mentioned, supply chain, that is creating issues, particularly in our data center businesses. We're seeing challenges in terms of getting long lead time equipment delivered. We're seeing challenges in terms of meeting RFS dates. And I would say that, look, that requires planning, advanced planning. So some of the things that our businesses have done is to procure such equipment in advance and at scale, just so we can benefit from some of the economies of scale. But this basically requires planning. You've got to run the business in a way that assumes that, look, supply chains aren't just in time anymore. And to the extent there are any customers of ours who are in the room today, I do ask for your understanding. If we have deadlines that slip, but this is something that's a big challenge for us. I think the second one is really around energy, right, and energy procurement. I'd say that the current inflationary environment in energy has driven people to think more creatively about energy sourcing. I think the fact that traditional forms of energy have increased in cost significantly actually makes renewables more compelling. So I do see an acceleration towards renewable energy procurement, whether it be solar, whether it be wind, whether batteries or something like that can play a role in it. And I think this is not just for data centers. Obviously, data centers are the most energy-intensive assets in our portfolio, but I see opportunities in towers as well, right? Particularly remote towers. Are there combinations of renewable generation and battery that can be used to supplement traditional sources, right? And then I think the last one is around inflation and more broadly financial market conditions. Interest rates have risen very quickly. Financial markets have become very volatile. What does that mean for us? I think the reality is that the cost of debt has increased significantly. It is creating pressure on underwriting for certain investors, both from a returns perspective because of the cost of debt, but also the quantum of debt that's available. As your interest costs increase, your ability to have higher leverage decreases, right? So I think that is leading to some changes in valuations across the market. I think it's most visible in the public markets where there's been a significant correction in valuation multiples. But I think in the private markets, I think it depends on the asset. I think investors are becoming more discerning. People know when they come across a quality asset, particularly growth assets. And what we're seeing is that the impact on valuation of growth assets hasn't been as severe as in some of the public market comps.
All right. Thanks, Wilson. I think on supply chain, I read somewhere at the time that with the pandemic, we moved, the world moved from just in time to just in case. So it's the opposite. So not to be caught short on sourcing equipment. On the energy as well, it's the cost for digital infrastructure. Energy is a big component, particularly data centers, obviously, but across digital infrastructure. SoftBank, mobile operator in Japan, came out and said that the cost of energy now is impacting their returns so much that they're having to reevaluate how they're operating their cell sites across the vast nation of Japan. Turning some off to reduce the cost of energy. So what about data centers that consume even more? It's forcing new ways of rethinking how to use these sources of energy. If anyone has any questions, also please start preparing your questions, and we'll be finishing soon, and there will be some time for all of you to ask questions. Wilson, related to this topic of challenges, how is that impacting? Is that reducing the appetite of investors to invest in the space?
Yeah, so look, I think if you go back to fundamentals, right, which is the need for infrastructure, regardless of these challenges that we've discussed, the need is there, right? One thing that's clear is that the trends that we're seeing in the world, particularly around digitization, right, and things like cloud migration, increased consumption of mobile data, and so forth, these trends aren't stopping. So the infrastructure needs to be built, it needs to be enhanced in order to meet users' expectations. Now, I think if you look at, for example, the most recent quarterly results from Amazon, Microsoft, they had a quote-unquote weak quarter, but weak meant 27% growth in the case of AWS, right? I mean, if you sort of look at it, right, I mean, okay, they didn't grow at 30, 33, 35, 40% anymore, but they still grew at 27%. And there is a need for infrastructure in order to service that demand growth. So we don't think that there's a reduction in demand or there won't be an overall reduction in demand in terms of investment. The question is going to be, how is that infrastructure going to be funded, right? Now, I think traditionally amongst telcos, a lot of it has been self-funded. What we do see is potentially a migration to more creative models and partnerships with financial investors in order to get that infrastructure built. And I think those opportunities extend not just to existing infrastructure, which can be monetized, but also new infrastructure. I do also think that you may revisit the whole sort of NetCo-OpCo type discussion. And we're seeing that play out in some markets, for example, like Australia, right? And again, I think that just gives operators and carriers more choices in terms of how they fund the infrastructure that they need.
You talked about collaboration with, working with operators who are offloading some assets. So you're helping them with that. So what came out very clear from this conversation, Wilson, is that the growth is still there. I mean, your customers are still growing, and therefore you're still growing despite these headwinds, despite these complexities and challenges, right?
That's right. That's right. I mean, look, and basically to sum up kind of what we're seeing, as a future trend, I think we remain very bullish on the sectors that we're investing in, particularly here in Asia. We see an expansion in the asset classes, and we have actually, as an organization, done that in other parts of the world. For example, we've invested in outdoor, digital advertising assets. We've invested in ground lease buyout assets or digital infrastructure real estate, and I think adjacent services will be something that will be in consideration in the near future. I mean, at the end of the day, the ecosystem is converging, right? We're all operating in one ecosystem. So I do see a future trend where investors like ourselves and others and our peers are not just focused on passive, digital infrastructure, but it's very likely that we will play across the ecosystem because it is one ecosystem.
Okay, that's interesting. So what's clear that complexities and challenges bring opportunities as well. So you mentioned right now working with operators, you mentioned infrastructure sharing. These will accelerate basically given these headwinds that we are encountering.
I think so. Look, and I think probably the one nuance here is around the complexity and challenges is that I think what that will do is that will favor investors and capital providers who are experienced in a space because they understand the assets, they understand the business models. They have a greater ability to be creative and to be flexible around how they partner. And so I think this environment will favor groups like those.
Okay, great. I want to leave a few minutes at the end for some questions, so I hope you're preparing some. I'll just finish with the last one, Wilson. Based on everything we covered so far, anything else you would like to add?
Look, Claude, I think, just to reiterate, I think we're very optimistic about the outlook for digital infrastructure, particularly here for Asia. It's often said that Asia is 3 to 5 years behind North America and Europe, and we're seeing that play out.
Okay. That's the advantage of being part of a global platform. It's true that in our industry, we've all witnessed it. I mean, quite often the trends are coming from North America, from the US particularly. It wasn't always the case. In telecom space, the US was lagging in the early days of 3G, right, Suresh? And then with 4G, 5G now, you mentioned C-RAN, O-RAN, things like that. These are developments that are obviously happening in the US before anywhere else. Thank you, Wilson. So anyone else has any question for Wilson? Yeah, please go ahead. They're going to give you a microphone.
Hey, Wilson. What markets within Asia...
Sorry, can you introduce yourself?
Oh, sure. Hi, everyone. I'm Steve from also Digital Bridge. So Wilson, what markets within kind of Asia Pacific do you see it being probably the most active, and also maybe ones that you don't see it as active in the next couple of years?
I think Southeast Asia is where we see a lot of opportunities. I think Southeast Asia is a few steps behind some of the more developed markets like Japan and Australia, Korea. So we're seeing opportunities in data centers. We're seeing opportunities in towers. We're seeing opportunities in fiber. And basically seeing opportunities in everything we do. And also, I think Southeast Asia has a relatively large population, right? I mean, across the ASEAN region, you're talking about something like 600 million people, all young, rapidly growing economies. So we've spent a lot of time and energy investing in Southeast Asia, and that's going to be a continuing area of focus for us.
Okay. Suresh, yeah?
I can actually ask Wilson the question almost any time, but here's one. I think also the challenge when you look at Southeast Asia, it's not one homogeneous region, and there's definitely the more advanced economies versus the more emerging ones. Is it easy? When do you think the emerging ones will be an interesting point in the evolution to invest in, right? Or does it matter, depend on the investment risk that you look at as an investor, right? Because all the money is Indonesia, Philippines, and Malaysia, Singapore at the moment, I think, a little bit in Thailand, but nothing much on Indochina, and so are those markets waiting for a breakout, or how do we think about them?
Yeah, look, I think as a foreign investor, from our perspective, the most important country risks that we need to evaluate is really around rule of law, and then the enforceability of property rights and contractual rights, right? That for us is number one. So when we look at markets like Indonesia, Malaysia, Philippines, these are markets where property rights and contracts are respected, right? And that makes those markets investable from our perspective. I think that it has to start there. Now, I think the second aspect is customer readiness, right? Do our customers want us to go there? If we build data centers, who's going to be in that data center, right? So I think on that, we're going to rely on our customers and the cues that they give us around when and if to enter those markets.
Thanks. Hi, Wilson. Chris Patton from Norton Rose Fulbright. I just had a question about when do you think in the Asia-Pacific region you'll see more consolidation, particularly in relation to data centre operators and platforms?
That's a great question. I think consolidation will happen when some of the weaker players face a shakeout. I think there's been a lot of capital that's been invested in data centres, particularly hyperscale data centres, over the last 3 to 4 years. And now with the cost of capital rising significantly in many markets across the region, the investment cases for those developments or those platforms, as the case may be, may no longer hold true. So I think that will then drive certain investors or capital providers to potentially review their investments. I'm not sure that we will necessarily see a wave of insolvencies across the sector, but I think the pressure on equity will cause them to think about what they can do with their assets, and I think that will inevitably lead to consolidation.
Okay, anyone else? If not, yeah? No, okay. We'll conclude it. Wilson, it's been a pleasure.
Thank you, Claude.
This panel with you. Thank you so much.
Appreciate it. Thank you.
Thank you, everyone.
Thank you very much, gentlemen, and thank you to everyone here for sticking around and asking the questions. Hopefully you got your answers. If you didn't and you want to take this beyond here, I'd encourage you to connect with Wilson and Claude afterwards. But please go and enjoy lunch, which is now being served in the exhibition hall, and we'll see you back here in an hour and 15 minutes for some round tables. Thank you.